Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 29th of October 2022, and we're providing our weekly gold and silver price update for the week ending the 28th of October. Last week we saw gold and silver prices fall, but this week we're expecting much more volatility and potentially lower prices, certainly up to and including Wednesday. Thereafter, it all depends on what the Fed says. Let's take a look. Looking at precious metals first, we can see that gold fell $13 last week, falling from $1,658 to $1,645. Having hit a high of $1,675 and a low of $1,638, a fall of 0.8%, just under 1%. In sterling terms, gold finished the week at £1,417, that's down £50. And in euros, it closed at €1,651, that's down €29. Silver fell 15 cents, falling from $19.44 to $19.29. Having hit a high of $19.80 and a low of $18.80, a fall of 0.8%, just like gold. In sterling terms, silver closed at £16.60, down 59 pence on the week, and in euros it closed at €19.35, that's down €0.35. The gold to silver ratio remained unchanged at 85:1. Now, looking at the prediction we made last week, we said we expect to see gold trade between 1600 and 1700 and silver between 1875 and 2050. Both gold and silver traded within those normal trading ranges. The difference between gold's high and low was just $37, and the difference between silver's high and low was just $1, even smaller than the previous week's difference. Looking at our other financials, we can see that Bitcoin currently stands at $20,604. That's up quite a healthy $1,453 on the week, though it has been even higher than that. Equities too was stronger this past week, and particularly on Friday. The Dow Jones closed on Friday at 32,861. That's up 828 points on the day and up 1,779 on the week. The S&P 500 closed at 3,901, up 93 on the day and up 149 on the week. And the Nasdaq Composite closed at 11,102, and that's up 309 on the day and up 243 points on the week. Oils were also higher, with Brent crude closing at $95.77, that's up $2.27, and WTI crude closed at $87.90, and that's up $2.85 on the week. Once again, though, the dollar index has fallen. Not surprising, bearing in mind that the other central banks around the world are also raising rates now. So not just the Fed. Because of this, we saw the dollar index now standing at 110.75, and that's down 1.26 points on the week, though it did strengthen towards the end of the week. Now let's take a look at the economic data announced last week, and what delight we have in store this coming week. Looking at this past week's economic data, we did point out in our weekly update to look out for Monday, but most importantly for Friday. Why? Well, let's take a look. We can see the S&P manufacturing on Monday came in at 49.9 for October, and the services PMI came in at 46.6. Both of them lower than expectations. On Tuesday, we had the home price index down 7.6% for August, compared with minus 7.3 the month before. And the consumer confidence index has also taken a hit for October at 102.5 compared with 106.3. New home sales marginally up. Real gross domestic product for quarter 3, higher than expectations at 2.6. And we can see that initial jobless claims were marginally down by some 3,000 compared to expectations, but 3,000 higher than the previous week. Continuing jobless claims also increased to 1.44 million. Durable goods orders were 0.4% for September compared with expectations of 0.7%. So we can see the economy is faltering somewhat here. Then on Friday, the all-important PCE price index, and to some degree the figures were not necessarily disappointing. Disappointing in the sense, perhaps, that there was not a great variance from expectations. We can see that core CPI came in for September at 0.5% against expectations of 0.5%. The PCE price index, the 12-month change, came in at 6.2, again compared with the previous month's figures of 6.2, and the normal PCE price index for September came in at 0.3% against the previous month of 0.3%. And the UMich Consumer Sentiment Index was just virtually again very close to expectations. Now, we said watch out for Friday because, of course, had this PC index been considerably higher than expectations, we would certainly have seen a huge slump in the price of gold and silver. Equally, had they been considerably lower, we would have seen a reasonable rise. It actually coming in as per expectations, then frankly, bearing in mind that this coming week, and we'll take a look at that in a second, bearing in mind that this coming week we'll have the FOMC decision on interest rates, our view at this moment is that the Fed is really just going to continue on track. So looking at this coming week's economic data, we have the Chicago PMI on Monday, the S&P US Manufacturing Index and the ISM Manufacturing Index, both for October, which is perhaps the last bit of data before we see on Wednesday the FOMC announcement on interest rates. And just a reminder to everyone that the Fed funds rate is 3% to 3.25. It is the general consensus that we will see a 0.75% rise in interest rates on Wednesday, thereby taking this Fed funds rate to 3.75 to 4%. Higher than many people predicted would likely happen when the Fed started to embark on rising rates. We also have the ADP employment report on Wednesday, which may give us a slight indication to the all-important non-farm payrolls due out on Friday. On Thursday, initial jobless claims as usual, and Friday, the non-farm payrolls. So what does this actually mean for gold and silver prices? Well, we saw both gold and silver slump somewhat on Friday as the dollar regained some strength, and the PCE data, though not higher than expectations per se, ensures that the Fed will raise rates by 0.75% in November, with a number of analysts and economists believing that the economy is beginning to falter and will, in months to come, an interest rise in December of around 0.5% is more likely than a 0.75% rise, unless the Fed adopts an extremely hawkish approach and is totally determined to combat inflation. So what everyone will be watching out for is the Fed Chair Jerome Powell's comments on Wednesday to see what is likely to happen in December. As we all know, November is already baked in. Now, we still see gold and silver being under some pressure until the end of the year, and depending on whether we have a recession, that pressure could continue for a while. So we still foresee declining prices. So what's more important perhaps is how do we see gold and silver this coming week short term, and we see it still under pressure, certainly up until Wednesday. But we have to say gold does have strong support at 1600 and very strong support at 1550, with resistance at 1700 and 1750 above. There are technical resistances around 1680, but broadly it's the psychological resistance and support levels we're focusing on today. Silver for the moment seems strongly supported at 18, and there is considerable resistance at 20. We actually think silver may indeed break below 18 this week, unless the Fed is dovish with Wednesday's rhetoric. We shall certainly see far more volatility this coming week than we had last week or the week before. We're pretty confident of that. So, gold this week we expect to trade between 1600 and 1700, with whether it'll quite go that low, it's a little uncertain, but 1575 to 1725 as outliers. We expect silver to broadly trade between $18 and $20, with 1750 to 2050 as outliers. What do you think? Please do share your thoughts. We'll be reproducing this video on Sunday under a different thumbnail and banner or headline. And next weekend, if we can manage to get a video out, we shall. But we are actually away on board a cruise liner. So we're uncertain as to what sort of internet connection we will have. But in the meantime, thank you so much for listening. If you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And we wish you a safe, enjoyable weekend and prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.